In our next panel, we'll be talking about alternative sources of finance. And I'm very honored to have the following panelists, Bernard Odote from the House of Procurement. Bernard is a founder, founder, House of Procurement, and he partners with organizations and suppliers across industries, helping them to acquire, manage, and finance materials, products, and equipment needed for the operation, sales, and production. He says, we guarantee our customers peace of mind. Take the next seat, Bernard, please. The next seat. We guarantee our customers peace of mind by delivering competitive prices, total cost reduction, working capital solutions, equipment finance, guaranteed availability, assured quality, and delivery full. He's previously worked for Safaricom, TRN, Diageo, Nestle, oh, those are my clients at some point. So Johnson & Johnson for Africa, Camisat for Africa. A round of applause for Bernard Odote. I'm very honored as well to have Business Partners International, Mr. Mike Mudhengi, Country Manager. He leads BPI Kenya team to source and support SMEs who require funding for their businesses and ensure all entrepreneurs receive world-class service. He is motivated by seeing businesses impacted positively by the BPI investment and the business owners happy to achieve their dreams and goals. He asserts that the best part of his job is listening to entrepreneurs' dreams and BPI finding a solution that makes that dream come true. Oh, it's actually sweet. No, I'm not even joking. You know, you read and you hear someone wants to listen to you, to your dreams, and make your dreams come true. How is Friday looking? How is your Friday looking? You open, coming with dreams. His favorite quote is by an African anonymous individual, says, a mind once stretched by a new idea never regains its original dimensions. I love it. Mr. Derek Luatati from IMFACT, please come. We were just having a conversation with him. He is an MBA with a strategic management MBA and a program for management development. He has a Bachelor of Degrees in Business Administration. He says he's proactive, result-oriented professional with 17 years extensive experience in corporate, retail, and microfinancing bank career in Kenya, willing and able to advance to a higher level of achievement through practical and application of his skills and experiences. His focus places increased emphasis on national creating opportunities, changing lives economically through sustainable finance and advisory support. And his key objective is to be recognized as an individual that delivers world-class customer-centric objectives and management, both economically and socially, even in the most challenging spaces. So please welcome Derek Luatati. Makofi tafadhali. I don't have the profile for Paul Msuva here, but is Paul, are you here? Paul from Safaricom. Msava? That is so sad because he's an amazing speaker. He was in my class, so he really he's an amazing speaker. Paul, it would have been nice to have him. So this panel is moderated by the one and only Amani Maranga. Give him a round of applause. All right, and as Msava, on behalf of Msava, what's your name? Joseph Njoroge. All right, Joseph is here on behalf of Paul Msava from Safaricom. Thank you, Joseph, for joining us. So the conversation is on alternative sources of funding for SMEs. And I'll start by setting stage. I ran a business for about maybe 8 years, a communication consultancy business. Now, we had no goods to sell. We sold our brains, we sold our service, we sold our ideas, which was the hardest thing to get funding for. Now, as I walked around, I saw a booth that was selling invoice discounting or invoice financing. And I said to myself, that's good, but I've done the job already. When I needed funding was when I had the LPO. And I needed to do the job. True or false? Yeah, in an let me give an example. There's an events company that put this together. They had suppliers. These suppliers give my bad. I have to put a pause on that because I had one more person on this panel, and Benson Minor from Dimkes, SACCO. Where are you? Oh, come, Benson. I'll take your seat. Come. Sorry, Benson. My apologies. Let me see. All right, so we'll give you an opportunity to introduce yourself. So I was saying, the person doing this event has suppliers, right? Someone has provided this stage, this backdrop, the screens, the sound, and these people have asked possibly the event manager to pay in advance, or at least put a deposit into this event. And yet you want to pay the invoice. How do we finance situations like that? I'm going to start with you, sir, and say that you want to listen to dreams. We dream of doing these big events. Tell us a little about your business, but start by responding and saying, how then do we finance those non-conventional? We're not a startup for tech. We don't have a platform. We don't sell goods that you can say we are part of a supply chain. Where do we sit?
Thank you very much. I think you need to find the right shoe, because if you wear the wrong shoe, it's going to pinch you. If you come to me for a product I don't offer, and I try to panel beat one for you, chances that it will not work for both of us. So you need to find the right person for what you're looking for. So if you're not looking for invoice discounting, don't go to him. Don't come to me. Because that's what we do is related to that context. You need to go find the right person for what you're looking for. Don't wear sandals with a suit.
You see, that's my problem. I can't find that person. Everybody else is offering the other product, the one I don't need. And that's why I'm asking, because you're telling the customer, go find another supplier. Are we together? So where is the solution for me?
And if I can summarize it for you, and I'll let the rest chip in as we go, is that when it comes to alternative funding, you can't be everything to everyone. You've got to choose where do you want to play. So as business partner, we've chosen where to play.
And that space is
and that space, we've identified it, we've crafted it well, and then we know. And we clearly state this is what we do, and this is what we don't do. And then from there, we close our doors. So then what happens that when you come to me and tell me this is what I am looking for, I will listen to you to see what it is that you want. Can I be able to fund it? If I'm able to fund it, I will fund it. If I'm not able to fund it, I will walk away as fast as possible. Why? Because I don't want to waste your time, and I don't want you to waste my time.
Let's talk about BPI. So what, in terms of the alternative sources of funding, what have you seen as a space for you to play in?
So as business partners, we play in the risk game. We call it, we're risk financiers, number one. And then number two, we say, if a commercial bank can fund you, don't come to us, because you don't fit our profile. By the fact that you can be funded by a commercial bank. We're looking for somebody who, for example, was declined by a commercial bank for one simple reason. They didn't have enough collateral because the bank said, you must have this level of collateral, because we're able to fund without 100% collateral. Secondly, either the bank said you need to raise some level of deposit for us to fund you for whatever it is. We're saying we're able to fund you 100%. Thirdly, we're saying, do you need some level of flexibility? And I'll give a very simple example of a situation. For example, you need to purchase equipment, and that equipment is not locally assembled. For argument's sake, it's coming from a different country. And it's going to take, for argument's sake, another 2 or 3 months for you to bring in that equipment. Traditional funding says the minute I give you the money, you start paying. Now I'm saying I'm willing to be flexible enough to allow you to bring in the equipment. have it on board, maybe even run it for a month or two before you start paying me. So that's the uniqueness we're bringing on the table.
It. I love it very much. Let me talk to the SACCOs before. I know, Bernard, you're itching. I think you have a solution for us, but just hold it for a second. Let me talk to the SACCOs here and say, is there really space for SACCOs to finance business in that space? And maybe Benson, you could start talking to us about DIMCAS and the SACCO space that you play in.
Okay, thank you very much. My name is Benson Maina. I'm the CEO of DIMCAS Deposit Taking SACCO. DIMCAS DT SACCO is a licensed SACCO by SACCO Regulatory Authority, and we are 2.1 billion asset base. The good story about this SACCO is that it was started by the women in the year 1999. They had to plant a seed of 200 shillings per individual. When I was looking at their minutes for the first AGM in 1999, they had only 349,000 in their accounts, and they have multiplied the same to 1.8 billion in terms of deposits. It was started by the women in the Anglican Church of Kenya. It's based in Kiambu County. We operate both in even in Nairobi County and Kajiado with 13 branches. The beauty about it is that it's driven by women, because out of the 30,000 total membership, 70% are women. Out of the 91 staff that we have, 57 of them are women. And we delight in that because we have seen the resilience that women can build in growing businesses. So for us, we are proud to be a community-based SACCO. We draw our membership from all the sectors of the economy in this country.
So the question for you is, how does your space as a SACCO, you have 1.8 billion in deposits, 2.1 in assets. What are you doing with those deposits, and how can that help fund the SME space?
The most important thing that the SACCO are bringing on board is, right now we are breaking away from the traditional lending methodologies. All of you know that the savings and cooperatives, they have been doing it at a traditional way of the multiplier effect, such that you've saved, maybe example, 100,000 Kenya shillings, the multiplier of 3 or 5, then you get your loan through what we call the co-guarantee mechanism. But for now, the SACCOs are breaking from this traditional model of lending, and we have incorporated what we call the front office services. In this case, it's a hybrid way of combining your savings and tangible collaterals, or even non-conventional collaterals, to secure this, to secure the loans that you want to apply for as an SME. So in this case, for us, as the banks do on what we call the transactional lending, for us it's quite relational, because it's more of savings and also your collateral at the same time. It's a combination of both, which makes it easy for any SME to get financing. On top of that, COVID has taught us that we have to save for the rainy days. For those SMEs who are operating accounts within our SACCOs, they were able to use or utilize the savings that they had accumulated during the entire period, even to pay their loans or even meet their installment when COVID hit hard and there was no cash flows in the business. That's how we operate, and we do asset financing, all sorts of loans that are required by the SMEs in the SME space.
All right, thank you. Bwana Joseph, habari yako? How is Safaricom SACCO doing?
Doing very well.
All right, tell us about your opportunity, if there's opportunity through the SACCO to fund SMEs. Are you in that space? Are you creating alternative opportunities for us to get funding?
Okay, thank you. Thank you very much. I would say, as my colleague has said, in terms of the SACCOs providing alternative funding, there is a lot of space. SACCOs now have become big institutions. We have products the same way, almost the same as what the banks offer, but the difference is the facilities are very affordable when we come to the SACCOs, because we operate a model where you are the member, you are the owner, you are the customer. So we bring in our resources as a group, and then we are able to borrow from a common fund. So you find that the SACCO loans are very, very affordable. And as you borrow, SACCO gives you space also to save. And out of these savings, you'll also be able to fund your business. So what we've done is that we've come up with products specifically for the SME sector. You'll find SACCOs are now offering what we call the LPO financing. We have both individual loans that you can use to fund your business. We also have the corporate loans, and which are very affordable. You find the way the banks do lend to the SMEs is a bit restrictive. But when you come to the SACCO, the rules apply in such a way that you treat you as a member. And because this is your business, you have a bigger say. So in terms of the interest rates or the cost of those loans, you find they are very, very affordable. You find we've done away with so many costs, like the processing fees, the insurance fees, so many costs that also prohibit the customers. Then the second part, SACCOs now have been able to provide what we call the collaterals. Because I know security for loans was a concern for most businesses. No one was willing to sign off that guarantorship, maybe for a loan of 10 million. But we are telling you, you have a title deed, bring it, we charge it, and you'll be able to get money out of it. So I would say there's a very big room, there's a very big space for SACCOs in funding SMEs.
I'll come back to the SACCOs. This is interesting because for a moment here, I'm starting to understand, and I'm wondering why, as an SME, I've never joined the SACCO as an SME. And I don't know if that's what you're saying, that I can join a SACCO as an SME or as a founder or director.
Yes.
And whether then I'm borrowing as an SME, as an institution, or I'm borrowing as an individual. That for me is an interesting. Is it for you? It's an interesting shift. Is that what you're saying?
Yes, we shifted to, okay, in our SACCO, we have what we call the individual members, we have corporate members. So this corporate member is the SME, and you find they have specific products for that category of membership.
All right, good stuff.
Yes.
All right, let's come back to Bernard, and he's itching because his house of procurement is like, yes, I have solutions for you. The financing doesn't have to be at invoice stage. Talk to us about it, Bernard.
Thank you, Amani. What I wanted to say is that a lot of people take LPOs, then go looking for funding. But there's a stage that you skip in negotiating with the person that gave you the LPO. Because I also don't want to face what I call performance risk. So the initial founders said about traction. I also need to see what you've done before, so I don't give you money and don't appear in Movenpick and you disappear. So if you know you needed the money, then negotiate just before taking that LPO. But a lot of guys take the LPO and call you and tell you, nitafutie funding. Niko na LPO ya Coca-Cola. So that's the first thing you need to do, negotiate. And the procurement people, especially for SMEs and most corporates want to support you, you probably will get some sort of a deposit, and if they give you 50% and they hold the other 50, you can deliver.
All right. I don't know if that is a truth, though. I think it's a good position to have, where you tell a small business, negotiate before you take the LPO. But let me tell you the truth. At the point where I'm about to get an LPO, I'm so grateful to that company. I don't want to jeopardize this work. Am I speaking the truth? I don't want to jeopardize. And then now I tell them that you must give me deposit. My friend, I'll take the LPO and suffer.
But you know, if you don't deliver the job, you never get another job. So you'd rather negotiate. Obviously, I want to go to what business performance said earlier, that there are people who actually do LPO financing, but based on the corporate you've gotten the LPO from. So they want to see if they can take the corporate risk. But then you have to convince me that you'll actually deliver. That risk, who is going to take it from you? So I'd rather I negotiate with the procurement person and they tell me no, go look for funding first, than jeopardize an opportunity to get another order from that company.
Well, could be true. Derek, hi.
Hi.
How are you?
Good, how are you?
Very good. So it was my passing the impact stand that actually started this conversation for me earlier about at what point is a point of pain for the SME? Is the pain point, where is it? in their financing cycle, and what are those solutions for that money? Talk to me about what you guys are doing.
I think from my experience and having been a banker before, and now being outside looking into the banks as well, I realize there's two hearts I need to remove. One is a heart of laziness, and somebody mentioned this earlier, no offense to anybody, but I think having been a banker before, we were very lazy people. Why? Because we never took time to understand the SME business. We never took time to understand how my customer operates, what the business is all about. And the reason was because I was very comfortable with an SME giving me this building as collateral, and that was comfortable for me. But if you look back, and especially during the COVID period, we learned our lessons. If you opened the newspapers during that time, the number of property and the assets that were being auctioned by banks because they were being unable to deliver, to collect from the customers they lent to was pretty high. And it's all because we failed to understand where the gist of the matter is in SME businesses. As Infact is a Dutch-oriented company that does factoring. Factoring is very close to invoice discounting. The only difference is that with invoice discounting, you focus more, as done traditionally by banks, you focus more on one single invoice. That can be very limiting depending on the level of business that that particular SME is conducting. But factoring makes an appreciation of a pool of invoices, a pool of receivables, based on your outstanding receivables, number of debtors that are on your portfolio. Because if you look at a typical SME, the growth path of a typical SME from the point of starting, they always have capital to start business. The first 3 years sometimes are manageable, but when an SME starts experiencing growth, and real growth for that matter, that makes sense, that is the point where they need a bit of financing to be injected into the business for continuous growth. And at that time, it's pretty accelerated. But then by that time, if it was a startup to a very formidable SME, they have not gathered enough to be able to have an asset to their name that they can give to a bank to acquire some sort of financing or loan for that matter. And therefore, as Infact, we thought of a very disruptive model of business that appreciates receivables and therefore comes in to give a working capital solution that unlocks any liquidity. Because if you look at a lot of guys who are in the supply chain, you have a financing timing difference at any one point between your supplier side of business and your demand side of business. So your supplier is telling you, pay me cash or I'll give you maximum 7 days. And your customers are telling you, I can only do more business with you if you give me 60 to 90 days. So you create a sweet spot of 90 days and say, any outstanding receivables that you have up to 90 days, I can be willing to unlock and give you cash upfront. And as you're waiting for your debtors to pay you, you're continuing to either onboard more business, give more credit terms for better business to grow, or even take on more calculated risks as an SME. And therefore, for us, that has become something that is very intriguing. And because of that, I don't require your vehicle or your property or your shamba or certificate of any sort to be able to finance it to that extent. I just need to have a good understanding of what your debtors are all about and how you conduct your business.
All right. So let me say what I'm hearing. I'm hearing there's opportunity for short to medium term, let's call it that, financing for SMEs with different structures, represented here, that can be available for you to have business continuity. That's what we are saying. Okay. So as we pitch, and I'd like you to pitch the solutions that you have. As you pitch, I have a question on responsibility. Because debt is a killer of businesses. All right? And at the end of the day, here, there's some level of debt that is being given. And as a business, I have to balance what I need to continue with my business, my margins that make profit for me as a business, and then what I have to pay. Not just back in debt, but in interests. So, as you pitch the opportunity for your for your lending, so to speak, I want us to talk about what can you do or how can you help us as SMEs to ensure that we have the right balance of those things so that we remain profitable. We're not a conduit for money. I don't know, am I speaking for any businesses here? Where you find that you've made 20 million, you're left with 200,000. You've paid everyone apart from yourself. How do you help us find that right balance? Let me start again with you, Brother Michael.
Thank you. How do you find that balance? So for us, the first thing we do is that we work with you on your projections into the future. So that's the first place we start. So you have your historical data and you're telling us, this is how it's been looking, this is how we've performed. But now at that point, we come and say, what is your projection looking like? And then we try and match with your permission and with your agreement. How do you want the repayments to look like? Remember I told you we try and be as flexible as we can. So what then happens is that it means that in year one, you can be paying, for argument's sake, you can be paying 50,000 a month. But in year 5, you can be paying 200,000. Why? Because we've worked your projection. And we're saying, once we inject this money that we're giving into your business, what is the impact? And that impact must be visible. So when the investment committee is seated and looking at that proposal, they're saying, Mike, here you've projected that this business will grow by 20%. Is that practical? And we actually haggle about that to make sure that that projection makes sense. So the customer first comes and says, this is what I'm projecting, and we validate that to just make sure that it's working out. So that's the first level of flexibility. The second level of flexibility is that we even go to the point of seasonality. And we say, is your business seasonal? Does it have some months that are highs and some months that are low? And then we flex that repayment to match that. But this, for me, is always the killer. And I was telling some people I was talking to earlier in the morning. If you do your numbers and they're not making sense, I tell you, walk away. Because if I'm going to do this transaction and you don't benefit, you get out as a loser, it's of no value to me. Because remember, beyond giving money, I'm also trying to create impact. If you don't benefit from the transaction, I didn't make impact. So for us, that's really critical.
And that's very good to hear, that you're looking for a double bottom line. You're looking for a financial bottom line, but you're also looking for an impact bottom line. Bernard, talk to us about your process as HOP and where that responsibility, where you help us find that balance. And also tell us, what is that product that you have?
So we do quite diverse financing. We do equipment, we do inventory, but we also work a lot in the corporate value chains, meaning a lot of the corporations, their suppliers are SMEs. So we created a product to help SMEs structure financing to ensure that what they're looking for is the right product. So if it's equipment finance, is it asset or leasing? Or if it's working capital finance, what kind of collateral can we take, including the inventory itself as a collateral? But one of the things that we do most is facilitate tripartite agreements, where the corporation, the SME, and ourselves are in agreement. And the corporation is committing to certain obligations. So the ultimate obligor is the corporation, and the SME is committing to performance. So credit risk is taken care of, and performance is now, because the corporation has qualified this SME, they're taking that performance risk out of that. So we sit and structure that and do the costing to ensure it is workable. So just to ensure that what you are getting is custom-made to your problem, and you're able to service what you need to do and get some margins. So depending on what you need, we will structure a solution for you that is de-risked by looking at future cash flows. If we can't see the future cash flows, so if your client, ultimate client or ultimate payer credit risk is not proper, then we will most likely not help you. So a lot of SMEs will get several contracts. I'll use Safaricom, for example.
Check. All right, we're back.
So I'll say, so you'll get an SME supplying Safaricom and as well supplying an organization that has a lot of non-performing debt. So they want financing, a portfolio financing. We can't do that. We'll just pick and say, corporate risk of Safaricom. That's what we'll go to. Then facilitate probably a tripartite agreement with Safaricom. But we've even structured group schemes. So like for schools, so that de-risks, if I have 100 schools, de-risk each other. We have ride-hailing companies 1,000 drivers de-risking each other, and they have some skin in the game. So also SMEs should come with some skin in the game, 5%, 10%. There could be 100% financing, but I will probably need that 10% as cash cover. That probably will come as a bullet payment at the end, but just to show that you are committed to this initiative or project.
You're telling us not to be lazy, to also come with some skin in the game. That's fine. Derek, talk to us. Talk to us about your products, but talk to us about how you help us figure out that balance.
I'll tell you, one of the words that continuously defines SMEs is volatility. And when I say volatility, I don't mean it in a negative way. SMEs have traditionally been known to take risks, calculated and otherwise. Yesterday I was having a word with Chris Senanu, and I asked him, hey, man, it's been a while since I saw you, and he told me, you know, Derek, when you work for a startup, it's not easy. That's why you don't see me. So, and I kept wondering, why does he still, up to now, call Safaricom a startup? But it's because every other day they're always trying to find something new, a new way of doing things, a new product and all that. So you become a startup at any one point. But I'll just touch on what he has mentioned. Structuring a facility right is so critical. And therefore, it means a lot for an SME to have certain systems sitting right in your business, certain structures sitting right in your business, so that when any kind of financing is plugged in, then you start seeing the returns and the viability of that particular business that you're conducting in the long run. Because I can tell you, I used to play a role in signing off letters of offer in the bank when I was working in the banks. And sometimes you sit down with an 18-page of a document, and a lot of times the offer letters are usually inward-looking. They will never be outward-looking, typical for banks, you know, and no offense to any banker in the house. And when you sit down with an SME player, then they come in and they don't want to take more than 3 minutes with you, because the guy is asking you, where do I sign? And the moment you sign, the guy realizes after about 3 months of struggling to make his installments last or sustain, that there's a clause that was included in the offer letter that doesn't make sense to his business at all. And therefore, when you sit down at any one time with any sort of financing propositions, going through that documentation to understand what exactly has been contained as terms and conditions or how the facility will operate remains very critical for you to strike the right balance. Because I can tell you today, there's nothing wrong with you securing debt financing from a bank and enjoying a working capital financing solution from Infact. If you match them well, then you start realizing the fruits of what your business would be all about in the long run. So it's also important for SMEs to be able to put themselves at that level to create success.
All right, I'll give the SACCOs the last word in this panel. There's an interesting aspect that changes with the SACCOs, is that you have savings. Because you're borrowing against an already existing relationship. So I just want to ask the SACCOs a slightly different question and ask, how have you seen borrowing for SMEs work when they're borrowing against their own savings? Is it working for them? Is it encouraging us to do more savings, or how is that working in that space? We'll start with you.
Okay, thank you very much.
Mr. Minor from DIMCAS. And tell us, Bana, how to get into the SACCO. From here, what do we do?
Thank you very much. I think first of all, I will say something in regard to what my colleagues are talking about. They've talked a lot about debt structuring, which I believe that's usually the cause, either the cause of default or the cause of the success for the SMEs. I've dealt with SMEs for over a decade, and one of the most important things that I have realized is what we call there's a gap in information that they provide to the institutions. So that asymmetry of information, maybe it's where the SME who is borrowing knows better than the person who is already extending the credit, and you have gone through that. So out of that, in the SACCO sector, we have combined lending with what we call capacity building. So in our budgets, you'll find there is trainings, free trainings to the SMEs every year. Every SACCO is mandated to do that. It's part of the cooperative principle. And out of that, we've seen a lot of improvement on the way the portfolio that we are managing as SACCOs in the SME sector. So I wanted also to come in.
That's very good. You're saying we're lending money to you, but also training you.
Yes.
We're building your capacity so that you borrow smarter, you do better with with a gap of information, like
Very
you've
true.
said,
Very
both
true.
what the SME is telling the lender and what the lender is telling the SME.
It is true.
All right, fantastic.
Yeah, so let me come to the question that
Yes.
you've already asked. As my colleague had talked about joining the SACCO, most of the people believe that as a matter of perception that you cannot register as a corporate or maybe a registered business or a limited company to a SACCO. This is very possible because with the new cooperative bill that has come into place, initially only individuals were eligible to that, but now legally even the corporates are able to register with the SACCOs. Or the only thing that the difference that comes is the registration fee that we charge, because now, as an individual it's quite cheaper coming in to the SACCO than the corporate in terms of the registration.
What's the difference in fees?
For an individual, we charge 500 shillings, and this one, the registration fee comes in to boost the SACCO revenue lines that have already been agreed upon by the members. We believe in democratic participation of the members, so even when we are coming up with the cost or the charges that we are going to extend to our members, it's decided by the members themselves, not the institution. Then you fight the what? Then you find that the cost of credit is already hanged on the wall. This is what we are supposed to charge you. No, it's you to decide then for us to actualize. So for our case here, for an individual it's 500 fee, and for a corporate is 750 Kenya shillings. Then on top of that, as you register as a corporate, we have partnered with banks and you are able to get personalized checkbooks. So there is no need for you to go to the bank to get the solution of paying your suppliers and all that. We are still working on T+1 like the commercial banks are doing. So partnership is what we've done to ensure that service delivery has increased on what we are doing in the SACCO subsector. On the side of what you've just about the savings, for sure, the traditional way of reading of SACCO is about your savings. You get the multiplier. But I said we have broken that traditional way, and we have agreed that the current accounts that SMEs operate in the commercial banks, still in a SACCO sector, you can have one, which has no minimum balance, it has no ledger fees, and it attracts any other, any other services that you get from the bank. It includes loans, also the checkbooks. You can also get internet banking from it. You can also get what we call the members portal. You're able to access all your statements free of charge without any hassle, because SACCOs have been allowed even to serve members who are in diaspora currently. So it's quite interesting, the model the SACCOs are taking right now, and which has been approved by the regulator. And most of the SACCOs that you're seeing in Kenya right now, because they are those that are check-off, they are farmer-based, they believe on the, what we call, they get a check-off list from the employer. Some of them are an example of Safaricom SACCO. Right now they have opened up their common board to include even the SMEs, people who are in business, so that they can bank with them. So in case you have your savings, and I want to make it right here, because you've asked about the issue of the shareholder.
Yeah.
The beauty about the SME products that we are giving is that, one, you are borrowing at the same time you are investing. Assume you have your own 1 million Kenya shillings that you have invested. End of the year, the SACCO will pay you what we call interest on your deposits. So if you have accrued an interest of maybe 500,000 from your loan, and then you also earn back how much? 100,000. So the net effect is what? 400,000 Kenya shillings that you have paid to the SACCO. So you are investing, at the same time you are borrowing. This savings remains your investment forever. Number two, the same SMEs, they have an opportunity to become what we call the directors, because it's one man, one vote. So you have an equal opportunity to sit at the decision-making table, come up with the cost of credit. This is how much we'll be charging for our loans. This is how much we'll be levying on a withdrawal fee. And that one makes even the cost of credit becomes cheaper, because it is you who makes the cake and you decide on how to eat it.
Are you guys understanding that banking has been disrupted? I'm listening to this and I'm saying, why would I have, sorry to the bankers, UBA, I know you're a sponsor, we'll talk about this, but are you understanding that this has changed the game? completely. It's so mind-blowing. I'm opening a SACCO account as an SME. And you have to understand that you're saying your savings is giving you interest. You're borrowing, that interest can net off on your borrowing. You're saying that I still get all the other benefits of being a SACCO member, including deciding what my interest rate can be in the future.
Very sure.
Safaricom, what are your last words? Because I don't know what you can add to this, but make a pitch. I'm happy to hear this SACCO conversation.
Okay, thank you. Maybe without repeating what he has said, you realize in SACCOs, the business model is actually very different from what the banks offer.
The banks, yes.
And that's why you find all bankers belong to a SACCO and they borrow. So you must ask yourself, why are bankers
borrowing from a
SACCO, including Central Bank? They have a SACCO. So that tells you there is something unique that the SACCOs are offering that the banks are not able to offer. Okay, I'm not talking against the banks. But what you are saying is SACCOs are very accommodative when it comes to lending. Because I said you are the owner, you are the member, you are the customer. So you make decisions that will govern how the business will be conducted. And therefore, when we come to setting our interest rates, we talk of 1% per month on reducing balance. And actually that has been the traditional rate for the banks. But you find we've gone further and even realized that this 1% in some instances is not working. So you ask the question, what if I'm borrowing within my savings? I put my 1 million in savings. So when you come, I'll be able to give you 90% of that money at a lower interest rate, not the 1%. Actually, in our case, we do it at 0.8% per month. And that means you'll be able to do your business at this affordable rate. And then number two, in terms, the SACCOs are very accommodative. I said you are the owner, you are the member. So I don't think you've ever seen a SACCO auctioning a property for a member who has failed to pay. If you have come across one, let me see it, because you rarely see it. Because we are talking, we are the owners, we come together, you tell me, yes, I had this business, I'm fighting difficulties in paying, maybe my suppliers have not paid me. So we are able to discuss and come up with a repayment plan, which is very accommodative. So, like during COVID times, actually we saved so many businesses. The waivers that were being given by the banks, we did the same. We did the restructurings and so on. And even when we were paying, I know that time, most banks withheld their dividends and interest payments. But you all paid our members just to caution them against the adverse effects of COVID. So it's a high time that the SMEs, and even individually, it's advisable you join a SACCO because the advantages actually outweigh disadvantages. And I have not come across any disadvantage of joining a SACCO. Previously, we had issues to do with the regulations. We are very highly regulated that you rarely find a SACCO or a member losing his or her money because we have a regulator. We are guided by operating principles. We have to meet certain thresholds and so on. So I would really encourage that if you have a business, either a startup or an existing business, think of funding from SACCOs.
I'm so sad that we've run out of time. I actually considered standing against myself over here because this is such a good conversation. And I hope you've heard what I've heard. First, that join a SACCO. Start that relationship. I've also heard that you have business partners that can help you with financing that is very, very friendly and flexible. And that flexibility part for me incredible. That people can factor where you are, look at your invoices, look at your business as a whole, structure financing for what you need at that point. There is opportunity for short, medium, and medium-term financing if you're not yet at founder level for raising capital. Are we together? Can we give them a round of applause? Thank you very much. Listen, find them. How can we find you? Very quickly, how can we find you?
Thank you. Our head office is based at Kiabu, Bishop Magwa House, but we have 13 branches across. We have Roaka nearest you. We have Roaka, Nairobi.
Do you have someone here?
Yeah, and we also have somebody here with us. She has a table there, our marketing manager. She is Salome. We have some flyers. We can be able to give you more information about ourselves. You can also visit our website at www.dimkesacco.co.ke. Call us. We'll give you more information about us.
Fantastic. How can we find you?
You can find us on Mombasa Road, Creta Business Park on the 4th floor. You can also visit our website, www.hop-global.com.
All right, fantastic. How can we find you?
We are located in Westlands here, Westside Towers.
All right.
We have a booth outside here with some of my colleagues as well. You can hustle anyone, including my CEO is here visiting from Netherlands as well. Feel free to harass him a bit as well,
All right.
whichever way you feel like.
Yeah,
So-
I've ideas
but
on their
a lot of
products, yeah.
times, call on us. We'll come to where you are. We don't like to hustle you as an SME to come to where we are. We can come and find you where you are at your business.
All right, fantastic. How can you find you, Michael?
Businesspartners.africa. We're at Lenana Towers on 9th floor. I'm here. I have cards on the table. Just come and pick one if you don't find me, but feel free to talk to me. We
All
do
right,
some
fantastic. And
flexibility.
Safaricom Sacco?
We are located at Safaricom Care Center, the one near Sari Center. Website www.safaricomsacco.com. But we have a booth outside here. You can visit us for more information. Thank you.
Let's give them a round of applause, ladies and gentlemen.